Good morning. So this is Tuesday, August the 6th. And in terms of my hypos, we are right now at the very top area of the pre-market distribution, which is built in a trendish way with multiple small values on the upside. And that means we're in a trendish pre-market setup. But this needs to be confirmed from the now cash market time, and therefore we need to see acceptance above the at the moment and the pre-market POC above the 45. We need to see rejection in this area when people trying to sell into it, and we then need to see a holding at the high, at and above the higher volume edge at 49. So this then would be with increasing buying volume the long. And if we see trying to get higher now again and can't compete with the sellers and see responsive selling, then this area around here at the higher volume edge from the pre-market, and also if they can make at least some attempt to go higher at the 53 with rejection scenario here, then we would go and I would look for the open rejection reverse. Alright, that means the short with at least target area, then again the open range low area about the 45, so means here from 53 to the 45, and even more to the yesterday value area high. This would be the next target to the area around the 39 area. But right now we need to wait and see if we see pullback and increasing volume for the long, or if we see more some kind of double top or rejection signs, and this would be then the short. Both are possible. If no trigger appear for the one or the other scenario, then we stay flat. In the 15 minutes you see that it was kind of very volatile for a pre-market, and for the overnight that made a new high, then we get the whole way back, went into the yesterday value again, test the lower area of yesterday, then in the pre-market, in the early pre-market, even prices tested the yesterday low of the day. Now we get back to the POC and even above, and now are at the area and trying to find a area for maybe playing the long. So it's kind of unusual, means very volatile for a overnight and pre-market. So as I'm talking, we can see the first rejection, who unfortunately appeared very quick, so there was no coming in. And you see this here, this is a 30 seconds time frame, we already went up with this first test and then immediately rejection, and now are back at our first target. No more entry here. We need to see back testing the area and then go quick in with rejection signs if we get a chance, rejecting and responsive selling around here for the short. If not, we stay flat and we just wait. Follow it in the footprint. You see it even, may see it better. I more took the delta and asked with volume difference for spotting the rejection buyer or sellers. All right. We're now at the open range low area, and remember that the bull's defending level reaches till 40.41. That means as long we stay within this 40.41, bulls are in control. I mean, this behavior from the pre-market showed us that there was at the beginning not so much buying, a little bit buying, but prices went up quite a lot. And on the opposite side, there was a lot of people selling them as they reached the area around 8 or 10, 8.15, around the 176 and 34 to 38. This was the yesterday value area high, and this was a very strong and bullish sign that all the people that sold into this area in between 8.15 and 8.30, they were absorbed. That means there was huge selling in between a 15-minute time period, but the structure was seen as a holding structure, a wedge consolidation. That means we see a lot of passive buying. As then the selling stopped and Delta showed us switching back to buying, I show you here, as the absorption that took on place here in this structure, as the absorption at the selling then stopped and we switched back to buying, which happens around 8.29 again, we see that the highs of the microstructure could taken out and then the buying to higher prices continued. That means in the delta, also in the 15 minutes window, when you see in this period, from here to here, you see a reddish ask bid difference, more selling, and this means this part here between 8.15 and 8.30 showed us a lot of absorption as prices went higher and then people get back. Now we see a similar behavior now at the open, after the open. So first we saw some little rejection. Okay, this could have been a wonderful scalping trade, which I couldn't catch because I was showing you and talking, and also prices went down too quick. But see the same behavior right now. You see, with the people getting out of position, now we sell into this, I called before, bull defense area, bull control level. That means they use the same technique again. Bigger OTFs uses this area to absorb the sellers. That means they can get passively in control of a lot of pieces for their longs. If the absorption stops because maybe, now you see, maybe the buyer is ready or have finished buying, then we may see either that he switches from passive to active buying, or if the absorption stops and you see then continuation of buying, then we may see that the sellers get, at least in the short term, traders get in control and trade their range trading stuff. We now have reached the low. That means we now have reached the bull's control level, and you see now the selling have impact to the price as the absorption, at least for the moment, has stopped. For us, nothing to do, but remember 38 is yesterday value area high. This is where the former absorption area and a continuation of long started. So it would be interesting now to see if yesterday value area high can lead to a responsive buying behavior, which we could spot then with at least a double rejection for a possible re-enter to the so-called, let's call it then the range long scenario. But we need to see a pushing lower and the rejection signs. What kind of signs you choose, what kind of indicator you choose. Is it the footprint, or is it just the tape switching in combination with the order, with the footprint, or if you use both of them, just make it simple and be sure that you can measure the signs and say, okay, if I see this kind of signs, then I'm gonna execute no matter what this trade. And this is important to, again, why I tell you this is so important to develop a play for it. And now we just watch here and see if we can spot responsive buying. Only if, then we would take on a trade. If not, then this is just the people playing the short and back into yesterday value. That means acceptance below this 38 area would lead to more advantage for the sell side and a bit more to accepting yesterday value, and with targets the 27 and the 21 area. So now you see that the rejection signs of buyers did not take place. That means there was no big rejection signs. From the test below, we had only seen one single people who may close their shorts, but no double rejection, but instead going with increased sell volume lower into yesterday value area high. As it usually with the short side, there is no real pullback, but they then immediately went down to the next volume edge, to the 50% of the week cluster at the 176.32. So that means now we are back at the 37, 38. You can look for a profile, for a pullback short again, as if the volume's not increasing now on the buy side, which means that we're still in a shortish scenario. This is the 38 level, but take care here around this yesterday value. If the rejection is now with the chance, now let's have a look. Now we are about to pull back, and now we pulled back, and now we look for the re-entering short again. What we not want to see now is that buyers coming back huge. This wouldn't be good, because then we would have like a more excess-like formation. Also here in the 15 minutes, that would means we tested, we had a look into yesterday value, we reached the first target area of the separation from the pre-market at 32, and now the ongoing selling could either lead to this quick rejection of buyers, but okay, right now buyers not coming in. That means if you're in your short, you give them the space at least to reach the lower area again at the 32 to 34 area. This is your target number one. And then you would have been entered very cheap here around this yesterday value area high, around the 37, 38. And then you could look if they make even lower prices. As long as delta and tape on your side, you can stay in the trade. If they then switch to more active buying on the way up again now, where you entered around the 38, 39, you don't have to risk any more than the high of this scenario, the 41. So this would be then a just 3-tick stop right now, which is obviously a very good thing to have more chances on the downside with a good reward and only a small risk. Right now, delta is still on your side. And remember again, target area number one around the 32 to 34 area, and then even more potential back to the yesterday POC, which is the 27. If you spot ongoing buying, increase of buying volume and pushing prices higher, then your stop at 40. 40 is at the right place. Okay, now you see that your short worked out pretty well, but see also people now take in the first profits. You see this here. As they reached the 29 area, that means after they made another 1, 2, 3 tick lower low, they took some profits now and everything okay. That means this short entry around here, we didn't see, you see that here, we didn't see that prices got up to your stop area at the 40 again. We see first some sellers coming in, then testing the higher area, this you see here, but they got absorbed. Again, some people pushing higher and they pulled to the 39, but there was no more buying then. Just 10 and 94 contracts, and then you see continuation of selling, and now you already made from the 37.8 area to the 29 about 8 to 9 ticks. Now you have to think, of course, I would now pull my stop at on scratch around the 38 level. So that means in this trade you're not losing any money anymore, but you're still having with this cheap entry the chance that they may test the low again. If they don't test, the market doesn't pay you, then so what? Then there's just a rejection, and you see that they already accept this area here from the pre-market absorption level. This was this ongoing heavy absorption. Remember from this pre-market when I told you that they sold into this level here, into the 50th of the week, selling, here, selling, and this was this absorption. This is where the buyer's control started from today pre-market, and of course this area was then defended. That means people got absorbed and rejected. This, you can see this here in delta very clearly in this move, in this candle at 922. The attempt to the yesterday POC was stopped on the way to this lower micro distribution, taken out prices lower from this, remember, absorption situation. And so that's it for the moment, and there's still a chance that they now testing it back if the selling continues. So please be patient. If you have maybe taken one lot out and secured some win here with this lower low, then you have maybe another contract now still running, and be careful, be patient. You have your stop now at the entry level 37, 38 around maybe, and with this pullback, and this is house money you paid, and just be patient. And yeah. You see now increasing selling volume again. We can expect two things: either a rejection by the buyers, that means people are on the bigger time frame, wanna on the higher frame time wanna buy here, so we see a rejection, or if not, then we see the 27 got tested, the yesterday POC, and both things can happen. But now you can thinking of, if there's now increasing buying volume can be seen here, then you can take out, I would take out even then my second position, because the second attempt could be marked as a failed one. Okay, this here would be then a failed one, as it didn't even reach the low. And now increasing buying. So for me, if I had a second position, I would now secure another lot of my short, which, remember, we had started with the pullback scenario here around the 37, 38 yesterday value area high. you can see in terms of my big picture preparation when I'm talking of the ORR, the open rejection reverse. So you see, thinking in a bigger picture means that this would have been the best short entry today, the best short entry that is reasonable and playable. That means with the open high, open range, testing the high, we said testing this minor PC area 51 to 53 and seeing nothing but rejection here means if one is quick, he can enter or she can enter here around this 48, 7, 9 area to get into the open rejection reverse, and then thinking in short term and bigger term targets, which I remember what I said in the morning. Then after the open, first target is the open range low, so only a 5 tick. Second target would be then the yesterday value area high, where I said then we want to see either the responsive buying, which means for the short positioned guy to stop, to flatten the position. For the people who looks just for the first entry, the range short to open up a position. And if you see no responsive buying, which I told you live at the screen here, we couldn't see the double rejection, I would look for in delta for a responsive buying sign. But the ongoing increasing selling volume means to stay then in the position. So you see, no matter how you play it, if you play the open rejection reverse with appear today, or you're looking for a long which didn't appear, which didn't cost you money, or you're looking for the short, re-entering the short, which I told you then here with the pullback at the 38, if we don't see increasing buy volume, which we didn't, you have your chances to play the market. Unfortunately, I was too quick for this situation here for the open rejection reverse. I was also showing you some stuff on the 15 minutes. Okay, I have to be a little bit quicker. Maybe I start to comment right with the open, so I have also time to take on the trade. And in the situation here, we had no first pullback, but the second. Then I positioned at the 38 and didn't get filled here anymore. So no excuse. In this case, I missed the short. This was the reshort possibility, and I missed it because a little bit maybe still afraid here at this moment. I will write this down in my application to be sure that this was a missed trade I've planned and a missed lucrative trade which could have given me some ticks profits. As you see that I live commented it even right, but I hadn't had still the old behavior patterns that blocked me to execute here. And the thing is, to change those old behavior patterns, everything starts with acceptance. That means to accept here, to know now this kind of fear is coming, and to say, okay, fascinating. I'm afraid here in this not so proven play for me to pull the trigger. And then they go, okay, that's okay. It's acceptance. You need just to do one thing to fight your brain. You need to stop fight your brain, because this would make you then go crazy. And if you start to think all the time more and more, just acceptance, I know this feeling, this is an old behavioral pattern, then this will help you to change your old behavioral patterns to new one that serve you better in trading. So now let's take back to the market and see that we now have some distribution that is B model. That means, of course, the short initiative created its own distribution, which took place around this, remember from the pre-market initial bull controls level. So we're still in this area, and that means prices stay within the more bullish area and above the 50% of the week. See in here, defense of the bulls. I will mark this with this green rectangle so everybody can see. This was this very cool scenario where we saw this huge absorption in the pre-market, and then as selling stopped and switching back to buying, we see that they got more confident. And this takes place now in the market, in the cash market. Again, that means the bigger, the higher time frame traders who are bullish, they don't want to give up their positions, and they say, well, this is the best cheap price here, And we don't even let the price go back to the yesterday report, but we see this bullish sign that they defend this level and stay within the higher bullish terrain above the 50% week. So this is now a good long level, means if the delta is flattened a little bit up, which we saw in this last scenario, then this would be a good scenario here around the 30 to 32 area to look then for responsive buying. But beware, if seller continue and increase selling volume and we don't see then the responsive buyers, please don't go for the short. Because why? Because this then would design that also the sellers are quite big today and maybe want to fight with the bulls and want to test then the 26 and 27. And you see just right now we are at this level of interest, and you see increasing selling volume, but also first big rejection here of buyers took place. And now this is very interesting. You can now follow the next maybe 1-2 minutes. If we see kind of double rejection, then we look for the long. But if not, and sellers coming back with more impressive power and pushing and pushing and pushing, then we may see that we then test this 26, 27, means the yesterday PUC. Now you see in Bund that they tested the yesterday VPOC, and that means that's always things you can look at. If you're some advanced trader and already know the levels where you say this is still the bullish area, this is from the auction theory, the main area. Look at this here, this was the volume edge, this part here, and I mark it with this rectangle so you see it closer. And you see then at the edges, no responsive buying, but increasing selling volume, which you see obviously here. I mean, can everybody see this? I mean, there's no, I don't know how to describe it. If you see this kind of behavior, then this is a very good trigger then going for the short, but only if you measured the risk reward, of course, before. In this case, it wasn't maybe make too much sense because as we pushing lower here, you could have gotten in at the 30 area maybe, and the VPOC already was at 27. So this was on your 3 ticks. So in this case, okay, you will agree this is not the best thing, but doesn't matter right now. It's just about how to read it. And some people try, or I remember watching myself when I was searching for plays earlier in my career or development phase. Then I was sometimes trying to force a trade, and my brain told me, well, there's the increase of buyers now, the responsive buying. But in reality, I was seeing that this is happening, an increase of the sell volume, which I don't want to see. And if they're not in control yet of your brain and of your old behavioral patterns, you will just sit in the trade and wait and see how your anger and frustration grows, and see, wow, -3, -4, -5, -6, and what the fuck, stopped out. Or even don't have a stop. If you're a beginner, maybe say, oh, I don't need to stop here, or only a stop at 21 or whatever. And market tells you quite exactly what to do, but, and that's important, only if you know where to look, where. I mean, this is why I'm always talking of this activity levels, and you see then how important is the big picture preparation. Because it doesn't make sense to look at the market all the time, and the order book and the order flow and the tape and the delta. This doesn't make any sense, because it may look similar on other situations, and then you may say, wow, here, responsive buying at this moment. But at this moment, at the moment PUC, I don't want to see responsive buying signs. Even if data may look totally the same, this is a bullshit information. This is just noise. And you want to see the signal out of the noise, and you want to see where is really reasonable and makes sense. And this is only in this activity levels. This would be in a range trading case at the volume edges, at the low, at the high. This would be when entering a new, older, an older distribution. This would look at the edge when we separate, when we see this area here, where we came from the pre-market, and leaving this edge and seeing that there's then no responsive buying and see it again selling. This would be around this area. So we want to see this increasing selling pressure around here. Not here, not here, not here. We want to see it here, exactly here. And when you look the delta and see that there was only this one little buying rejection, which was most in the higher probability that was just a closing of short-term short positions, yeah, then you see there was no responsive buying. And then you see, okay, increasing selling. And then you have to be quick or get in with the pullback, which I described before at this scenario here, with the pullback, and go then for the short. Anyway, we still see increasing selling volume. That means prices now have their next target area below the yesterday POC. This is then the area of yesterday value area high. This is a little bit a blurred scenario. When you look at the 15 minutes window, the computer calculates the 21 as the value area low. For me, there are two edges of interest. This is the 23, 24 edge, and it's also the 21, 22. That means I also see at the 23, 24 because why? Because I see some pivot point here where the long started, where the short ended from the day before. So that means my target now would be not the 21, but more the 24 when you're looking more for the scalp. If you're looking for the maximum reward and only have a shorter time frame and trading here in this scenario right now with the reshort, you may need to wait to see at least then go into the 21, 22. But again, watch the market and watch if we see a increase then of buying and an end and delta switching. And I will not tell you that this is easy, because becoming an expert in this, you can train and develop maybe in a few months. So you can be at the same level or better even than me. But the next thing is to not put more self-made noise into your trading. And this is the problem of 90% of all traders. And this is maybe why most of the traders fail. No matter what, if you're cleaning houses or if you're a professor at a university or an engineer, don't think that you have any advantage if you have a good if you went to college or whatever. That doesn't matter, because this survival brain mechanisms of old behavioral patterns, this works in every kind of human, no matter how much knowledge and I don't know the English word right now. What is it? Let me Google. Yeah, education, of course. No matter how educated you are, and this will destroy you anyway. So the real art of trading is, after becoming pro in big picture preparation and reading the market, so micro and big picture bringing together, is then reducing the noise. And I will tell you, most of the times you will bring to this absolutely complex open system of trading of markets, okay, what it is. Definitely perfect. You will also add your own personal, emotional patterns, behavior patterns based noise. And this is the problem. This is so chaotic system, and you then also bring your own noise. That sounds like crazy. Why would someone do this? But that's just the way we work. And this is our survival brain. This will, first of all, provides us, this will protect us from losses, because losses is very dangerous in your old savannah brains, in your old medieval brains, when it was protecting you in the jungle from the tiger that was hunting you. To have fear, this will increase your adrenaline, that will make your heart go faster. That means you can run faster, you can fight, or you can fight or flight. And this mechanism then also started in trading. And
the brain tells you then just don't lose, because your survival brain is so primitive. It cannot make it can distinguish between a real danger, a real scenario of danger, and this trading situation of a loss just in your money. It just tells you it weighted the loss double as high as a profit. It will make you feel bad. And then your old behavioral patterns from your childhood or whatever will also add on this. So some people who are not so confident may feel then some pressure, self-critic, self-judgment, not being good. Maybe hear some voices within, they tell you you're not good, I told you, maybe from your father, grandfather, whatever. And there will be also then the overconfident guy who will be then really hypo and really wow and fast and everything. I can control the market, I show you. And he made it then go into a fight and say, now I show you how I get back my money from you manipulators. And so you have to accept that these are the things taking place. And if you don't believe me, then just make this exercise of awareness and write down your emotions when you execute, when you trade, or make an alarm every 30 minutes during your trading session and write down your physical sensations, your emotions and thoughts, and be honest to yourself, and you will see, wow, there are some kind of feelings, there are some kind of behavioral, there are some kind of physical sensations like bouncing feet, a little bit fridge, a little bit crunching with your teeth, and some pressure in your chest. You will feel something, and you also feel some emotions like a little bit in fear, a little bit maybe depressed, or a little maybe feel excited, or feel in power and control of everything on the other side. And you also may feel some thoughts or recognize some thoughts like, oh, I can do it, or oh, I can't do it, and why again? If I take this, if it's a loser. And you will see this will hind you to have a clear mind and protects you. But it will not serve you in trading. And you need to find acceptance and don't fight those emotions. Fight acceptance for them, and then make new behavioral patterns based on it that serves you better in trading. And that's the art to become a trader. And it's not discipline. It's not the 100% discipline. So if you're disciplined, you're forcing, and I have to, this will not work, because this is just emotional patterns. And if you say, I will work this emotional patterns with discipline, this is like fighting your brain again. You fight your brain again as you say, why am I not disciplined? Why can I not make this profit now? Or after some losers, you may ask yourself, wow, I have these losers now. Revenge trading. Now I'm gonna take this back, what the market took from me. And so I thought earlier, I'm good because I'm so disciplined. Discipline is very important. And willpower, of course, as well. But at the end, these two character signs I will not let to the master trader's mindset. It will not lead to being consistent profitable. The only way to transition to become consistent profitable, after, I repeat this again and again, knowing the technical side, micro and big picture, the only thing to make from underperforming to consistent profitable is then to find acceptance for your old behavioral patterns and find a way to create new. All right. All right, so you see they reached the target. This means this most significant edge of yesterday, the one that was also calculated at the 70% by the computer, the yesterday value area low. They reached the 2122 edge. You can see this here also, the 2122 edge. You see this? There's some little lower volume below area, and you see they set in here. This was some pivot point yesterday. This was even in the cash action, a cash market, the point where we tested lower areas. We see some little distribution, but at the end, that's also the point where the long started then again. So the 2122 edge was important. You see this here in the overnight market where we test lower, and where also again you see this here, the longs then started around this area. We set in 19, 2, 21, 21, 22. So this area here was significant. And in delta, could have one traded this? In my play, no. No. There was only a single touchdown here at this area, and then a rejection, and then the testing of shortish behavior or more shortish lower behavior took place in between 942 and 944. So this was already 4 to 5 ticks above the low. So, of course, you can enter here. You can. But you have to accept them ticking against you 1, 2, 3, 4, 5, 6, maybe 7 ticks. Makes sense, huh? Because they already tested this, so the long scenario is already active still as they're here. In this case, they didn't test it, but hey, you don't know. And if they test, you cannot take your position, you're long out if they're going back a little bit here and here and here and even test maybe the value area low. So from risk reward, this wouldn't be a good trade to get into here at the 27, because where would be then the target? Of course, the target was this at the moment distribution edge, which took place around the 50 of the week, 31, 32. That means getting into the 27, having a target around this edge here at the 30 would mean a 3-4 tick chance, and the other side a 7 tick risk. You will agree that if you're not having then a 90% hit rate, this is maybe not so good having this low risk reward ratio.
So if I would trade it this morning, if I would gotten into this trade with the open rejection today, which I told you I didn't, if I would got into the short that also Matthias described in the screen, he entered with the break here. He has a different way to play it. Doesn't matter. This both is correct. You just have to understand how it works. So for me it was the reject. For me it was the pullback area around here. For him it was the increase of sell volume, tape based leaving, increasing selling volume of this control level. Anyway, the market, for me, there wouldn't be any reason now to trade anymore for this morning, because what normally takes place in the first 1.5 to 2 hours took place today, even in the pre-market, and then in the first hour till around here. So market provided very good chances today, and therefore I would then even stop trading. If you have traded my short I described live and traded my open rejection reverse, which I described in my hypos, then I would let it be for today then, and take your profit and make your analysis, because market already showed some fine volatility, showed some fine moves, showed the initial TIF selling, and showed the rejection, now the reversal. So this is the mainly two main moves you can see in the bull. Means a attempt first got rejected, then we look in one direction, see some trendish short move here take place here, and then seeing the rejection and the reverse. This is then the second thing, and the rest should be now, if you're watching the profile, which is about to get a little bit more normal distribution, is about now seeing they may fill out and repair the profile, and we may see also range market. This is just a higher probability now, as everything is already played, everybody should be satisfied. Does not mean that there is possible that there are coming new trendish people, other time frame traders, and we see another move and another trendish move and whatever. I only tell you, you always have to calculate in your trading, and if you see that there is just the main thing we expect from the market has already have happened today, then you should think about taking your profit, call it a day. Wonderful. So that's the way I would do it.
This is what I was talking about. You see, that you see now that they just fill out and repair the profile. That means look at the development of the profile till the rejection moment here around 9:45. You see that there is some gaps here from the separation of the bimodal shortish lower value and upper value. Here you see this area of lower volume. After the rejection, they just repair the lower area, now they repair the higher area. That means this is now from the statistical point of view. I mean, look at this and see this here. This is now the normal distribution, what the normal distribution would look like, with a higher acceptance of the middle area from the price around here, and you see high volume area with the edge around here and the lower volume area with the edge around here. That means market now, the people took their profits, everybody saw the moves today, we can participate if you're good, and if not, then I think now it's not the time to keep it up again for trading, because we are just now in a more balanced mode. You see that they feel comfortable the last 10 minutes in this area, so we may see that they create a more tighter range, and this is just, I think you will agree, this is just in our normal distribution, and they repaired the profile so far. So for me, no more trading today, because everything happened and took place out from my hypos. Every hypo already almost was played. The rejection reverse, the reaching of the long level, and hypo number 1 was just, hypo number 2 just showed the reverse, the open rejection reverse, but no acceptance above the 49 level. That means they just didn't play it, but the other hypos, they took place, and this is the orientation, this is the prices, and everything was already reached so far. So no more trades then for me. I will stay live till 11 o'clock, but will only comment if something interesting again is happening, which would be, for example, a backtest of the today's POC, bouncing back maybe, and then go in and build value above the 49 area to see if there's a possibility to get into then a long. Don't ask me how much is the expectation or the probability for that, because I don't mind. Nobody cares. We just will react on the market's behavior.
And you see market stays within this range. Only short-term traders, very tight range in between 38 and 43. You remember what I said? They just repairing the profile and already have repaired it, and everything already happened today. So people are satisfied, and now we see just a balanced market. As long no external news impulses coming in, it will not move far outside of the 2 days range. There's still something a little bit to repair here on the upside, so maybe they test the upside a little bit, and nothing to do. So I would recommend to stay flat.
And you see we stay within this tight range still. At the yesterday value here high, building value and concentrated trading in this very, very wedge consolidation in between the 176.38 and the 176.42 to 43. They just took a glance, took a little spike outside here, and you see no fallout buyers, and then we fell back into the range. So this is no risk reward for me and Bund here to trade. And like I said, I will be live till about 11 a.m. and again, there's nothing interesting. The only interesting thing is to see that how market participants react when there's only short-term traders, shorter time frame traders, excuse me, and they just playing this tight range, and the mediocre OTF appearance was in the pre-market and in the time then from 9 to let's say 10 o'clock. There was everything there was played and was played the usual way, which means one could take the edges of the volume, could take the activity levels as reading if market participants showing that you have an edge more for the long or for the short side. And yeah, that's just it. And it's wonderful to see that on these days you can train. And you then will recognize there are some days, maybe 20% of the year, where this doesn't work out very good because it's too low volatility, or either too low, or on the other side, too high volatility. And yet last week we had, remember these days where we had 2 days very low and then on one day a little bit higher volatility, where I had profitable trades but they didn't reach the targets. I even had about almost 90% rate of lucrative trades, but they weren't profitable because my trades didn't reach the target, so I had to go out on scratch or with a little loser. So, and you have to recognize then this is based on the changes of volatility, and that's okay. And the reason is then to stay and get back or stay on your track to your goal to become consistent profitable is to then not fall into a change of your trading system and your play, because sometimes it's just the market that does not provide the market modes you need for your plays to develop. And that's very important. And today you should see that your plays you may develop in a normal volatility market, what we see today, that they will work out wonderful. And they also reach the targets. And but remember, if there's no long-term time frame, other time frame trader, no longer time frame trader, then we will not see bigger extensions, and market will sit on the same place for the whole morning and will not move outside of its initial balance range or outside of another range that is built within the pre-market area. And that's the thing. Only short-term traders, no movement. A mediocre short-term trade, other time frame traders, then you will have this kind of day what we see today, this kind of movish and that kind of behavior, which I love the most, I have to admit, because then you can go with this auction theory, you can go stay with a value, then leave in the value, trading the next value, going back, find acceptance there. This is the most, I would say, from the technical side, most easy to understand, to learn market. So I think today I would everybody give the recommendation to replay with your Sierra chart or whatever the today's pre-market action. Look at the delta, look if you can spot and learn to get better in seeing absorption. Look if you can see how this normal distribution from yesterday, and look how the market in the overnight and pre-market reacts based on it, taking your levels out of this. Then look with the open, how an open rejection reverse is looking like. Then look back and see how it looks like when we are about to leave a at the moment value from the pre-market to go back in a lower value from yesterday. See how they react then at this volume actions. See how they react then If there's no responsive buying, which didn't appear here, but you see the increase of sell volume, take a look at the delta at the tape, what it looks like, and make it then simple. Take delta, take tape, or take the S-bit volume difference or the footprint, but decide for one of those or a combination of one or two, to not get too heavy, to not have too much cognitive, or to not to leave some room for the trading decisions for your cognitive resources in your brain. And this is a day where you can learn very good auction theory and take in the volume profile to measure, and take in a first step the big picture on the higher time frame level to take your levels and see what it then behaves. Also, if you even earlier in your career, start taking my morning outlook and my hypos, and now check these levels and look how they react then, and then try to find out why do I use these levels. Then try to find out why is it important to find orientation on the value, find orientation on the next higher time frame of maybe the 50% level of the week, of the month, when I call it the more bullish terrain or the more bearish terrain. Then take a look how this levels, if this is not random, look at this at the days before, how market reacts there. Try to find out what is the big picture about, because normally you only take, if you're pro, I would say maybe 20 minutes in the morning for your big picture preparation per market. So that's what I need. Normally I need 20 minutes for my big picture preparation. And sometimes, of course, you have to make changes because the pre-market already is very trendish like it was today, and we already reached the level from my big picture preparation. Then you have to make a chance before 9 o'clock cash open and so on. But overall, this is the way to success. Understanding the market, able to make your own big picture preparation, and then going on developing plays and a strategy. And the last step is then develop a master trader's mindset, or let's call it a clear mindset of awareness, where you can stay clear within the process of executing a trade and managing the trade.
So right now price advertises for lower regions. People got out of their longs after seeing here that they can't go even higher than the at the moment POC. That's normally that then if you see that there's then coming sellers into again after not even getting to the higher edge of this micro consolidation. I hope you see what I mean. Call this entering up here along. Your target is around here. Okay, now seeing, here's the POC at the 40. Now see that the price only can go to the POC at 40. It's the same game all the time. And now see that there are sellers coming in already. See this here in delta? See this how they put closer than trying to play the long here? And now see how sellers coming in again. See this affects of course the people who are trapped now in their longs and going out of the position which happens here. So means that price right now advertises for lower areas, but you need the confirmation first of the time. This is then the time price opportunity, and you can measure the success of the move with, call it with the volume. This is then value. And if there is some time and then also volume, then the opportunity is higher when staying here to get into again the lower volume edge of today, which is obviously here the area at the 30. Therefore, we need a continuation of selling and see, because then in the auction theory we call this very moment here. When this happens, you see first people going out of the short, and then prices advertises for lower regions by going back to the maybe the volume area low, and you see as long as when pulling back see not a follow-up of short volume, then this is just advertising. Means in this case no short volume continuation but rejection. Means let's go back to the area where we feel comfortable. This is the at the moment distribution in between the 38 and the 42 with the POC at the 40. And that's just what exactly at the moment happens. In the Bund, this is not a good scalping market. So it means I wouldn't go with the fees and everything in the round turn. I wouldn't go for this trade. When seeing here this rejection and you're trying to get in here at the 38, I mean, come on, this is only 2 ticks you could have made, or 3. I just want to show you the principle of auction theory in this example. Price always looking for acceptance, and if it advertises new areas lower or higher, we need to see then when pulling back, for example, that there is still an increase in interest in selling. Not if we pulling back an increase then of opposite side with buying that happened here. Auction theory for every market, but it's always a little bit different, the behavior of the market based on its liquidity, if it's a liquid or illiquid market. And of course the Bundesmoor is of course a liquid market. Higher liquidity.
Still nothing to do. You see that now price advertises now for the higher region. This time as it sets back, we first saw some rejection, but then again increasing buying volume. See this here? With this moment when we saw a rejection first, but no double rejection, but people coming in with buying again. So that means now the higher probability is that we reach the 48 area. This is the next higher volume edge. But remember, people are in their longs. You now have the advantage at the moment more at the long side, but only for some micro scalp, even though the target then would be at the 48. And you see they invested their risk on in the books. Means if they cannot get higher now and see a ongoing rejection at 46, then the probability rises for the other side. But right now, you're not in control of this. You need to trust in yourself. But here is a good example now for prices. Advertises first for a higher price, then is coming back at this moment. You see here, and you see again increase of buying volume happens here. If you then see this and open up a position here, you can go with the scalping target with the edge here around the 48. This is very small position. I just want to tell you this is auction theory again, but in this example, in the opposite of to here, we don't see then the quick rejection, but we see again a rise of buying volume. Okay, so now you're at the edge is on your side with this play, open up around the 44 with the target area around the 47, 48. Can you feel now the moment when you're not having a control over this trade? Right now we're in this situation. We see the signs. We only talk in the theory, okay? This is very important. I did not trade this because this is super scalping, very, very short potential. But only for a purpose of knowledge and education of auction theory. Again, we use this theoretical entry here at this moment at 10:52. We see prices advertised for higher regions, leaving this at the moment consolidation. Prices pulling back and re-entering long bullish volume, increasing here delta bullish volume. Makes us enter. Cheap, 44. Now price tested once and made a higher high, but only one tick. Remember, open range high and volume edge high is at the 48. That means target would be the 48. We only reached 47 and now price coming back to test. And now check yourself. Do you feel like, whoa, I don't have this trade right now in control, not in control? That's right, you don't have it now in control. And you know what? If you're now a little bit anxious, a little bit feeling uncertain, that's totally okay. You have your stop tight below, maybe around the 42 level. That means only 2 ticks stop. And you see at this moment at least, that your trade is still alive because of course people are into a long position. You see this here in delta. You think they are not feeling the same pain as you? Yeah, they will, but they may be professionals and say that's okay, or even have new behavioral patterns and say no, that's no problem for me to have this situation. But you see also they still trying to keep in control of this higher area, which is taking place in between 43 and the 46 area. As long as they are staying in control and keep on buying, which you see here in delta, they see the chance to drive higher prices, to sell then quick at the volume edge area around the 48, where you then also will sell. And you see still they're trying to buy. But what is happening right now? Well, this is what we not can control. Prices can't go higher. Delta and buying has no impact at the price right now because of absorption. That means the people who bought into 45 and 46 got absorbed. That means you can buy as much as you want as long as absorption continues. As long as somebody thinks on the other side, in the selling side, thinks, well, this is a cheap price, of course. The advantage for me to get cheap into a position here at the moment edge for sale. Of course, this will take place. And this is the moment where, of course, you're not in control of your trade because you already made a decision here. You already made a decision based and say, where's my stop and where's my reward? You can only take the situations and say, now I have an advantage. That's what we do in trading. We live with calculating statistical edges, advantages on our side. And then the market decides if it's played out or not. So right now, you see, they tried it in this first attempt. This was this phase from 1053 after we after we get into a theoretical long. And they pushed high, buy till the 10 o'clock 56. Then we see some people get out, lighten up their position, getting a little bit of risk, selling a little bit. And then you see absorption here at this moment at 10 o'clock 57. And then again, starting active buying. But price stays no move. Absorption at 46. And now you see here at that moment, exactly at 10, 11 o'clock and 1, they get out of their longs even more. And now you would be maybe out of this position because you see we're going back to the moment where everything started. We're going back and look if we came back into the value. If your stop would have been at the 42, you then would be, you maybe would be still into your position because there were only 19 contracts traded. So this is the last few millimeters where we are in control of this buying scenario, and they use this is the last chance now for the buyers to take out the long at the end and then finally reach the 48. If they got confronted with a lot of responsive selling, then that's what we not can control. But then what will happen, of course, is we will fall back into the smaller distribution. That means we will see the 40 or even the 38, 39 level. But right now, the buyer's still trying it again. You wouldn't have been, remember, not stopped out because at 42 there were only 19 contracts traded into the bid. That means probably a high probability that you did not get stopped out and still waiting that your target here, I let it here at the 48, got reached. But you see here live just how auction theory, when you made your decision, and then you need to find a way to relax and to accept this and say, fascinating, a little bit fear, I'm out of control. That's totally okay. That's those moments when the second attempt often not working out. You don't get your quick boom, 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 success. Sometimes they try. And then it's about if they stay in control. And then it's about where's your stop. And then it's about accepting the moment of not being also then in control. And now you see there is a lot of responsive selling now going on as reaching the higher area. That means that's already the signs that you may get stopped out in this trade, but that's okay. You have to accept that sometimes it's not just not working. And that's also why I say I don't trade this very minimalistic small scalp targets, because risk reward isn't good. But you can see how auction theory is playing. Here, no acceptance, direct rejection, going back to the value. Here, pullback, acceptance, and now we have the time price opportunity more, and then volume measures the success of this move. And you see here when you're measuring the volume as success or unsuccess, you see that they tried it, volume measured, you try, lighten up, try, bigger, getting out of longs. Try, bigger. That means we have now the situation that volume proves us that the advertising for price, which was only confirmed by time so far, so thinking of more market, micro level market profile, is not yet confirmed by the volume, because volume tells us after they couldn't extend the high once, at the second time they got close to it, but you see responsive selling. The third try, even more responsive selling. So that's the question. Just still, as long as at the 42 level, nobody is confident enough to now sell, to push people out of their longs, we will see that we stick in here. You see that here, 1, 2, like dojis here and here, then there's only one. So, of course, why? They are trapped. So we need some bigger fella who's pushing now into the 42. But as long 42 is nobody interested in selling, take a look. This is now interest in selling 19 contracts and 2 contracts. So we need to see selling into this without absorption. And then we see, of course, the price is going back to, now we sell. It's high probability that we see the 40 now, the POC, and then even going back to the 38, 39 area. That means right now they play back into price acceptance area from the before consolidation, which is, of course, this rectangle from 38 to 43. Now they play in it. Again, of course, please don't trade. This is bad risk reward. Interesting is that the people who bought here are haven't given up yet. So that means they still absorb the selling into the 42. That means another moment where you're not in control, because we just have to wait what market's saying. This was just again the moment where we have an edge, where we see that the interest decreases in buying, people getting out, rejected selling. This is just an advantage. And now the higher probability, as I said at this moment, that we see the price 40 and then 90 at 39 and 40 and 38 means going back into this value. Now you see how they still fight within, going back to the POC, going back to this edge. And it's 11 o'clock and 10 minutes, and you see that it's so late in the morning now. The moves have no power anymore. Bulls and bears, algos are here. You see now they're pushing more from the ask. After we saw some action at the bid, some refilled bid with still 400 contracts, but only 2 ticks above. There are 647 contracts in the ask. So this is just not a good example then, because the market had already slowed down so much. But you see that they are back into the value from this wedge consolidation, and now they're pushing and battling here at the 41. There's also some spoofing. You see there was short time provided liquidity, 800,000 contracts. People sold into it, and after the one saw that they selling into it, they stayed, but then took out and then switching. So this is now more algo trading. And anyway, this is now the late morning trading. You also should recognize that this is normal, that the price will not move more than 2 or 3 ticks, as long as there are no information and news coming from the outside world and getting people to engage again. But we see here in the auction theory again, acceptance, pulling back, increase of volume leads to the try of getting higher and higher and higher and higher. Seeing absorption, getting out. Here at the moment I said we see an advantage to prices going back once we entering here the 42, which happens here, and playing into it at this moment at 43.4. I said now the moment is where we have the advantage for the short. But due to the bad risk reward, both trades wouldn't have give you any single profit, because the power of the market at this late hours of the morning are often, and you see this here, very, very weak. So moves and prices will not take you very far distant, but staying very close. And again, this acceptance area was the moment where we see the short try, but in this case without acceptance, as prices when moving lower and pulling back became quick rejected at 10.38, which leads to a single excess on the downside and leads to the higher probability that we going back to the acceptance before reaching POC and the higher volume. They even played it higher, but this time we see at least no excess, but failure at this time, but then with a higher probability of a short didn't take place, because for what case ever, nobody knows, people absorbed the sell. People absorbed the sell, absorbed. You see this? Selling, getting out. Selling, absorption. And whatever reason this is, why, nobody cares. But the fact is, this everything now taking place at the beloved yesterday value high after losing from the POC. So that means just that's the way it is. And algo's now a little bit playing here. And as it is, I said again, no time to trade. One could see really good how to get an advantage at this moment, which it played out, and at this moment when it didn't play out, because market didn't want to pay us, because it decided not to. But normally you need to have, when reading the auction theory, at least a 60% advantage on the decision on your side. I think that's beautiful at the last sentence, the last word today. And I thank you for watching, and see you later with my recap. This is Anton Höpfel for Manapa Trading.